but you're never passionate about insurance until you've gone through the experience, right? Until there is an impact. I've recently had a client that I'm working with where sadly the husband has passed away, and the husband was earning like 4 times as much income as the wife, and then they have 3 kids, and there was a life insurance payment. I can tell you, like, the conversations I'm having are, we're putting the money into a portfolio, we're going to pay your regular income, your kids are going to be fine, your retirement's going to be fine. If that life insurance wasn't there, they would be forced to sell their home. Like, the hours she would have to work, like, they're in a completely different situation off the back of it.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we've got Kate Dron, Chief and Appointed Actuary at Partners Life, here to talk to us about, should you cancel your insurance and just save instead?
Okay, Kate, welcome to the podcast.
Great to be here.
So today's episode, it's a sad one, Mike.
It is a sad one. And this was really triggered off by an article that we saw in Stuff, where a mum who was 36 cancelled her life insurance to save some money, and then 2 months later found out that she had cancer. And, you know, with the cost of living crisis that's going on at the moment, you know, everyone's just struggling just to stay afloat. You know, on one hand, it's a reasonable decision. You know, she's like thinking, what are the costs that I need to meet up front today? This necessarily isn't one of them, so I'm going to give it the chop. But actually, maybe that's not the best idea over the long run.
Yeah, I mean, Kate, as the Chief Actuary at Partners Life, I'm sure you're seeing a lot of numbers at the moment. What are, like, with the cost of living crisis, what are customers saying? Is this a common thing that you're running into, where people are going, look, I get my insurance is important, but, you know, my mortgage has gone up so much, my rates have gone up, my house insurance has gone up. Is this a common thing we're seeing?
Yeah, look, it is. And it's one of the issues that we've got with life and health insurance, in that you don't necessarily see the value of it every day. So with your mortgage payments, you know that if you don't pay your mortgage, you're going to be losing your house. If with your car insurance, you know that if you crash your car, it's not going to get repaired. And so you don't necessarily see the value of life insurance, because it's something that's going to happen very rarely. And in fact, life insurance once, but even the trauma insurance and income protection insurance, it's actually unusual to be claiming on it. But when you do claim on it, it's usually a severe outcome. So it's kind of that, trying to get that checks and balances around understanding the frequency in which you can claim on something, but the impact of that claim. So with life insurance, the impact is high, but the likelihood of claiming is quite low.
Yeah.
Unlike other, expenses that you might have.
Yeah.
I mean, let's not ignore the pun that was just made, the checks and balances.
Yeah, it was so good.
It's just, I mean, so this Auckland mum diagnosed with terminal cancer, and then, so weeks after making that decision, she's diagnosed with cancer. She had the policy for 10 years, right? And you're making those premiums, consistently paying. And you could imagine when they're looking at their budget going, I have to pay groceries, I have to send my kids to daycare, I have to make my mortgage repayments. Life insurance, maybe.
Well, also, from her perspective, probably, I've had this for 10 years and I've never done anything with it. So it's been useless, like I've thrown all this money in a hole for 10 years and all of a sudden I've got other things I need to pay for, which again is probably a pretty common perspective on things when you are paying for something for 10 years and you never actually end up using it. However, it's like we say to people, if you never get to use it, perfect. Yeah.
That's exactly right. That's the best outcome, having life insurance and never having to actually use it. But it is something that people do. It does go through their head around the fact that they've got this, they haven't used it, so potentially they don't need to use it. What they have had over that period, though, is the assurance that if something did happen, then they would have some value. Look, these are really, really hard decisions to make, and they're decisions that people are having to make all the time at the moment. And what's really critical is that it isn't a decision around keep my insurance or cancel my insurance. There are other options around that, and that's why it's really, really important to try and get some advice around that. So talking to a financial advisor or talking to the insurance company, because there are ways that you can retain some of your cover and reduce your premium down. So, there's options around premium holidays. There's changes that you can actually make to your policy, so reducing the sum insured so that you keep some, not all of it. And for things like income protection, where you have a wait period, you can, lengthen your wait period so that makes it more affordable. Benefit period, how long it's paid for, you can reduce that down. So it's really important that customers understand that there are options available to them rather than just cancelling, and that there are ways around that. And that's so important to be talking to someone and getting some advice around that.
Yeah, we're certainly seeing that a lot with our customer base at the moment. It feels like the Reserve Bank's really tightened the screws on the average Kiwi, with businesses, now looking at making restructures, redundancies, with that inflation still kind of getting squeezed out of the economy. But that's just having an impact with interest rates still being high, not coming down just yet, that we are having to go, there are clients where they're losing their roles, or they're reducing their hours, and they're having to make tough decisions. And I feel like there's probably still a bit to go. It's going to get a little bit worse before it gets better.
I think the end of this year is probably when we're going to start seeing some real relief out there in the economy. I predict that the OCR will drop, kind of the last chance this year. But even that doesn't give you instant relief for your mortgage, right? Because most Kiwis are on fixed rate mortgages. So there will still be some pain trickling into the start of next year. And, we've got a ton of examples. But, James and I have been working in, financial services for, a number of years now. I won't say the exact number because we sound old. But, around customers who, I specifically for me, I had a solicitor who never updated their income protection from when they first took it out as a junior solicitor. So had it the entire time and never kept track with their salary. And then when they needed it, when they eventually got cancer, it was nothing. And it's that thing of they're paying these premiums for all these years for cover that is not, it's not effective, it's not relevant, it's just kind of a waste of time.
Yeah, I think we're at a point in terms of the recession we're in where, interest rates are still high because we're not quite done with the inflation that we're working through. Everything's heading in the right direction, but with interest rates being high, and that does have an impact to businesses are going, okay, we're going to have to look at a restructure. Some people are going to lose some jobs. That's going to have an impact in terms of people's spare cash, which is going to impact a whole bunch of other businesses. So, Kate, those conversations I think are going to keep happening, where unfortunately people are going to have to keep looking at their budgets for a little while before it gets better. In terms of, there's all of those options available. I guess the question is, how do you actually look at all of those options?
Yeah, look, the first thing is if you've got an advisor, then you need to be talking to your advisor. So you need to be having those conversations and sharing the fact that you're going through some stress. Redundancy is a classic example. Quite often policies have a trigger for a premium waiver if you go through redundancy. So that's short-term relief. That might be enough to get you through that. If you don't have an advisor, you need to call your insurance company and talk to them about what options are available if you're under pressure with paying your premium. They will either put you in touch with an advisor, or if they're suitably qualified, they can probably give you some advice themselves. But there are absolutely those options available, and people need to remember that they're not alone.
Yeah.
They should be reaching out to the advisor. And also it's, some of this is around the advisors themselves. They know that this is a stressed environment at the moment, and it's checking in with their clients, making sure that their clients are okay, that they're not going through too much pressure, and actually letting them know proactively that there are options available around affordability if that is a concern.
Coming back to this article, so we've got this mum who's had terminal cancer, cancelled it because for that very reason, right? Cost of living, struggling to keep to a budget. The other really interesting point is not just the impact on the mum, but there's a toddler, there's a baby, there's the husband who, and I see this quite a bit going, one person is the breadwinner in the household, the other person doesn't need necessarily insurance. But in this situation, which is not surprising at all, he's had to stop working because he's got to help out with the kids, right?
Yeah, look, and this starts coming into some of the gender balances here as well, because one of the things that we have seen is that there are lower levels of insurance on females than males, because quite often the one that is at home looking after children is the woman. And so it's understanding that it's actually the people that are left behind rather than the person who's being insured themselves that factors into how much insurance you actually need. So it's hard to know what happened in this particular situation, whether there was a choice between cancelling for one or both. And if it was, the woman that it was chosen to cancel for, that's not always necessarily the right decision. Probably what would have been a better decision is to keep a certain level for both rather than remove one or the other. Because you're right, if you've got the primary caregiver who passes away, afterwards, the other person needs to either take time off work or there is going to be childcare that's required. So it isn't just a matter of who's in a job and who's earning the most money that you need to be taking into consideration.
Yeah, and sadly, while there's this article, it's not the only article we've seen recently where it comes to a sad insurance story. I know you sent us another article about a 29-year-old diagnosed with cancer. Yeah,
look, I mean, when you're young, you think you're bulletproof. I mean, we've all been through that.
Mike still does that.
Okay. I don't think I'm bulletproof anymore. I'm well insured. Yeah. But look, no, what we're starting to see now is there are changes happening around when people get diagnosed, when people have certain conditions. Now, overall, the rates of cancer aren't changing, but particular cancers, we're starting to see some of them hitting people at a younger age. Now, it's still really important to understand that cancers do primarily affect older people, but more and more we're seeing some cancers are actually affecting younger people, and some of it's quite significant increase. And so that's why it's really important for people to understand that a bad diagnosis can happen at any age, and that's what you're protecting against, is that one-off event that's occurring. And we're going to keep seeing some of this come through as well. The research on a lot of this is pretty new. It's because you're starting from quite low baseline, and it takes a little while before you actually realise that some of this is increasing quite high, and especially when it's relative to somebody in their 50s who still has a much higher likelihood of getting cancer than someone in their 20s. But more and more we're starting to see that flow through.
Yeah, and it's really important, I think, that people keep their insurance updated for their stage of life and what they're doing. It's not you take it out at 18, you set it, forget it, and that's it forever. I was saying I've got an example of someone I know who's a solicitor who took out income protection insurance, first day of the junior job, never updated it for 30 years, and then later in life when they needed it, it just was nowhere near a relevant amount of cover, and thought that they were covered, and no one ever brought it up with them, and that was it. It didn't even provide any form of cover for her, basically.
Yeah. On the flip side, I've also dealt with somebody in their 50s recently. They got all their cover out when they had a huge mortgage and really little kids, and they were paying like $2,000 a month for their life insurance and income protection. I did a review, and pretty much we could get the premiums in half. So it's both sides, right? You need to make sure the insurance is right. It's not too low, but it's also not too high.
Yeah, look that's absolutely the right thing. So it's all about your life stage events that are happening. So I mean, you talk about the salary this woman was on, and so that increasing. So you need to keep that relevant. But there are things like buying a house, getting married, having children, getting dependents, and then you go through the other side of it, and your mortgage is paid off, so you no longer have that debt. Your children are hopefully, well, they're growing up, they're hopefully leaving home.
I could see the look in your eyes, Kate. You're like, kids are actually never not dependent on the parents.
Always dependent.
My boys can stay at home. No, but I hope they can start paying me some money for it. But that's the key thing about it. It's making sure that, insurance companies aren't here just to sell insurance. It's actually providing protection for people who need it. And so it is, when you've got debt, when you've got dependents, when you need to protect your income, even single people with no dependents have something that they need to protect. That's what we're there to provide. But then you get to the back end of it, and it is making sure that, do you still need to have that cover? Is that at the right level? And making sure that often you're switching one for the other as well. It's like, I may not need life insurance as much, but actually my income is significantly higher. I'm really keen to make sure that I'm protected until I'm retired, and so that you can transfer that over into, reduce your life cover perhaps and move into income protection.
Yeah. You said something interesting around like the insurance company is there to protect. Why do you think Kiwis are so crappy when it comes to thinking about insurance? Or like you look at other countries in the world to compare them to our insurance rates, right? And we're not very, is it like the whole she'll be right type attitude or?
Yeah, look, I think that's part of it. That's kind of our ethos growing up. It's kind of like, she'll be right, we'll get that sorted. So you're not necessarily thinking about the downside of things, which is why it's really important to have those conversations and have these types of conversations as well. There's a few other structural elements within the New Zealand environment. And look, I like ACC, it's a great thing, but that's a protection, and people potentially misunderstand what it actually provides for you.
Yeah.
So
That's a really good point.
Yeah.
That's a really, really good point. That ACC is awesome that we have it in this country, but it can give people
false sense of how well they're covered. Yeah. The number of times we talk to customers and they're like, oh, ACC. I'm like, they're not going to cover you unless it's an accident, mate. yeah.
And they're not going to cover you for the full amount.
Yeah.
So, it's a contribution. So it can help actually keep the insurance costs down in New Zealand because we've got ACC in place. But it has acted as a little bit of, it's okay, we've got not just ACC, but we've got a good welfare system. People complain about the welfare system, but when you compare it to other countries, it is relatively generous. And those are the sorts of things that you've got to take a step back and actually go, what do I actually get from those? Because they're important. They need to go into the equation. And then what extra do I need over and above that?
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
So the jury's still out on that, but there are a number of hypotheses that are out there around why that might be, and some of that's to do with lifestyle. We're quite a lot more sedentary than what we used to be in the past, so that can drive into it. There's some stuff around the gut interaction with highly processed foods, so that could be another cause of it. One of the other interesting theories that I quite like, but it's quite insightful, is that you've got a lot of people now that are actually surviving cancer. So we've got really good ability to diagnose and we've got good ability to treat, which means that you've got survivors who are going on to have children. And those children, there may be some predisposition to getting cancer. So in the past, those parents may not have survived their cancer, and so that you wouldn't go on to have children. Now you've got people coming through that potentially have that sort of high disposition for it, particularly early onset cancers, because those are the ones where in the past you wouldn't then have gone on to have children. So that's, there's still a lot of research that needs to go on into that, but there are certainly things that are happening and really good medical advances, but often with good medical advances, there can be some, unintended consequences of those as well that we need to be aware of.
Yeah, part of me is also like, so we're talking about this article with this young mum. We're talking about, potentially cancer popping up at a younger age. My whole thing, though, is while all of this is sad, you shouldn't be thinking about whether you need insurance or not based off increased probabilities or not. Somebody is going to get sick. Somebody is going to die. And do you know the saying that irritates me the most, Kate? We're not insurance people. I'm like, what the hell does I'm not an insurance person mean? Like, I've made the decision I'm not going to get cancer, or I'm not gonna pass away. Yeah. Like those kind of like, okay, maybe there's some increased probability of some stuff happening. Yeah,
I don't believe in it.
I don't believe in insurance. It's like, all right, you can have whatever belief you bloody want, but if you pass away, or if you get sick, or if you can't work, or if your partner can't look after kids, which means you can't work, you guys are screwed. And then we're talking about this is the whole interesting thing about insurance, right? We're talking about we can't afford insurance in a cost of living crisis. In a cost of living crisis, you can't afford to not have insurance even more.
Yeah, and look, the thing about insurance, it's the impact of the insurance. So you're right, it's the impact on your family members, on yourself around insurance. Because it doesn't happen that often, people aren't exposed to the impact of it. So it's not until you start reading articles like this and you actually go, actually, that could happen. Like, I can see myself in that person. You know, I'm not that young now, but you know, another 35-year-old can go, actually, I'm a mum of 2 kids as well. And if that could happen to her, it could happen to me. With other types of insurance, house insurance, car insurance, you can see the impact that insurance gives you. So you know that you can get your car repaired. You know that when you've got all the flooding that we've been having, you know people who have had their house damaged and then repaired by insurance. You don't necessarily know people who, particularly when you're younger. Older, it's a little bit different, but when you're younger, you don't necessarily know people who have actually claimed on their insurance and seen the value that insurance can provide. But honestly, I mean, we've spoken to some of our claimants, and I mean, we get some of the most wonderful letters through from people who have claimed on their insurance and just the relief that it's provided them.
Yeah.
And I think those are the things that you want to get those people in front of the I'm not an insurance person and have those conversations, and they can actually feel the value of that insurance, because those people are passionate about it.
Yeah, but you're never passionate about insurance until you've gone through the experience, right? Until there is an impact. I've recently had a client that I'm working with where sadly the husband has passed away, and the husband was earning like 4 times as much income as the wife, and then they have 3 kids, and there was a life insurance payment. I can tell you, like, the conversations I'm having are, we're putting the money into a portfolio, we're going to pay your regular income, your kids are going to be fine, your retirement's going to be fine. If that life insurance wasn't there, they would be forced to sell their home. Like, the hours she would have to work, like, they're in a completely different situation off the back of it.
Yeah, and I mean, and that's just the perfect example of the value of life insurance. It is not there whilst you're alive. You know, it is there afterwards, and that's the peace of mind, the satisfaction that you should get when you've got insurance. And that's what we were talking about before, about the best thing about insurance is to actually not claim on it. I mean, that means that you're alive. But the thing is, when the worst thing that can happen when you've got insurance is that you do claim on it, then you do know that you've looked after your family. You know, in my case, looked after my husband, looked after my boys. They're going to be fine. I have to tell my husband where the will is actually filed, because he has no idea.
Yeah.
But apart from that, once you've got that sorted, it's good to know that they are actually going to be taken care of, and you don't have to then worry about that.
Yeah. Don't worry, Kate. There's always 1 out of 2 in a relationship. One knows where the will is, one that doesn't. Yeah. And then you run into the odd one where both of them go, wait, we should have a will?
Yeah.
Now, Kate, unsurprisingly, as the chief actuary, you have brought some numbers along with us, and they are quite interesting in terms of who is taking different types of insurance out. So what are some of the interesting takeaways from those numbers that you brought in?
Well, some of the interesting takeaways, probably a little bit disappointing takeaway, is the fact that, you know, the average age of people taking out insurance is in the 40s. So, you know, that's not helping the fact that you've got younger people who are, you know, who can be exposed to this, who have bought houses, who have got children as well. And those are the people that should be taking out insurance. So it's disappointing to see that, you know, we still wait until quite a bit older before we actually take out insurance. What we're seeing as well is that there is more younger people taking out living insurance. So that's the insurance around trauma. So you have to survive to claim on it, and income protection insurance. So those are the insurances where, you know, you something happens to you and you get your income replaced as a consequence of that. So it's good to see that people are understanding the value of that living insurance, but also the actual life insurance as well, that's really important, because in the particular circumstances that we're talking about, that's going to be the critical one for those people going forward.
It does make you think, with like the average start age being 42, like what are people doing? Where, you know, if you've got kids, if you've got a mortgage, granted people are buying houses a little bit later in life, but there's still a truckload of people buying houses in their 20s and 30s and have people responsible for them. It's like, what are these people doing? Are they just winging it? Are they just hoping they're going to be okay?
Yeah, it's an interesting one. I know like a lot of I would say probably 90% of our first home buyers who come through Lighthouse end up taking out some type of cover. And that's simply because as financial advisors, everyone, we say it all the time, everyone loves doing the fun stuff, right? You love buying the houses, the investment properties, getting your KiwiSaver right, investing in funds. It's the safety net underneath that no one likes to think about. And that's something that we are constantly drilling into our customers is when it's all going great, amazing. When it all goes wrong, it goes very wrong very quick. And you need to have some safety net there.
Mm. And people come to me and they're like, something bad has happened. James, you're the financial advisor, fix it.
Yeah.
And it's like, I can't. There's nothing I can do. Sell your house. Like that's like, they're the kind of conversations you're having, which are just bloody miserable conversations to have. Mm.
And it's not even just, so I mean, buying a house is a trigger. Mm. It's actually happening later in age at the moment, and there's less people buying houses, but you've still got that issue if you don't buy a house. If you're renting, then something happens to you, then your partner will still have to pay for that rent and you're on less income. Yeah. So it's not just buying a house, it's actually understanding what are your expenses. What are your expenses? If one of you die, then you're still going to have expenses going forward, whether it's a mortgage or whether it's rent, you've still got that issue. So I think it's understanding that it's, there may have been triggers or there are triggers that absolutely open that conversation up, but that doesn't mean that the people who aren't buying houses don't actually have that same need as well.
Yeah, it's a really good point. And I do think in terms of the people that we tend to talk to, that those getting financial advice, those buying properties, and the reason we've got the podcast, right, is maybe for those who can't afford financial advice or aren't in a position to take that step forward. Yeah, you do assume mortgage insurance, but rent insurance and potentially lower income, maybe I can't afford insurance, but like I said, it means you need insurance even more.
Yeah, 100%. So, Kate, what are some steps that people can take? We ran through them before. If they're thinking the cost of living crisis is getting me, maybe I have to cancel this. What can they do before they get to that point to try and ease some of that cash flow pressure?
Yeah, so as I just said before, one of the first things that they need to do is talk to their advisor. If they don't have an advisor, then they need to talk to the insurance company. There are lots of options that are out there. A number of products will allow you to take a premium holiday, so you can pause your cover for a period of time. But there is also, reducing your sum insured, changing some of your benefits that will allow you to reduce your premium. Those are the critical things that you need to do. But you also need to remember, particularly if you're in a relationship, if there's two of you, that you need to think about both of you equally, and it's about the person that's left behind, the dependents that are left behind. That's important, not so much who's earning the most money.
Yeah, and if maybe you don't have insurance right now, maybe you're going, oh, these stories sound pretty grim. I should probably do something about my own situation. Just remember, it's really important to have some level of insurance. You can put insurance in place, make it work with your budget, but you're leaving a good financial plan should have what are your goals, how you're going to grow your wealth, and how you're going to protect your wealth. So it's really important. You're looking at the levels of life insurance. You're looking at income protection. You've got a good emergency fund. You've got that will in place, and we know where it's getting stored. They're all really important parts, and that she'll be right attitude. We're not insurance people. It is just crazy. So make sure you're not that person. Make sure you're not putting your family at that level of risk. Kate, thank you very much for joining us. Thank you very much to Partners Life for sponsoring the episode. Please make sure to subscribe, review, like, and we'll catch you next time.